Okay, you can see that I'm on the page that loads financial trading system. So it says real-time client version 4.0.04. You all have that. I'll run it. It's already running, but I'll run it again so you can see the full process. And here's the screen where you get to choose your case. Always follow my cursor in this video. We typically use the FTS 30 stock case, and I have tested the valuation tutor from within the FTS 30 stock case. But I'm going to try to do it without signing in to see if that works, and I believe it does. So follow my cursor up to the upper right. We'll click on Valuation Tutor, and it gives us a decision screen where my cursor now is, I can launch the Valuation Tutor. So I clicked on that to launch it. You see a progress bar circling. Oh, it says you have to log in. So I was wrong that you can do it without logging in. I wanted to do it that way in case you ever forgot your password. So I've entered my password. I will log in. You see another progress bar on the lower left. It's initializing. Now, to get myself oriented on the screen, because there's so many windows that open up automatically, I'm going to minimize. Matter of fact, I'm going to close my ticker window because I'm not trading in this video demonstration. I'm just doing valuation. So I'm going to take and widen that window a little bit. Incidentally, on the lower right, where it says stock index model, that's where a lot of you should be looking to understand the parameters and the risk aspects and the return aspects of the portfolios you've created. But that's, again, not today's demonstration. So I'm going to go back up to the top, click on Launch Valuation Tutor. We see another progress bar. And then some choices. The first one, visual analysis of SEC filings, is an extraordinarily sophisticated program because it goes into those documents, which are hundreds of pages long, at 10Ks, 8Ks, 10Qs, and it makes graphs for you that are live and dynamic. But that's not today's topic. Common size analysis, as you know, is when you take items on an income statement or on a balance sheet and make them percentages of some common denominator. For income statement, we typically make the denominator sales. Financial ratios, visual comparisons, again, I encourage you to experiment with this, but I'm not using that capability today. Where I want to concentrate today is intrinsic value models, where my cursor represented by the little hand now resides. So I'll click on that, and it says please wait, so we have no choice. We shouldn't have to send data, but let's do it to get this program jump started. Oh, I had to click on the next window. I forgot to tell you, there are so many windows open in this FTS that sometimes you have to go to your taskbar at the bottom and pick what you want to look at. So what we found there was one that gives us a choice of data sets. The textbook one is the one that goes along with the online textbook. I think it's most fun to use the current FTS data set, which has all sorts of updates in place. So I clicked on that. Now you see new windows opening up on the left. It's going to default after it loads all the securities, to the first one alphabetically, which is 800.flowers.com. We don't know much about that company, so I think that's a little boring. So we're going to change the stock as soon as the data is loaded. Follow my cursor to the upper left, and we have to see a little bit more of the upper left screen. So I'm scrolling that division bar down, and it says select stock to analyze. That was on the left in orange. So I'm going to use, a lot of us like to play in the forum with Facebook, but at least as of 2012, but there hasn't been data for a long time. There's not enough trading information to really load everything we need for a full demonstration. So we use Microsoft, and the NASDAQ symbol for Microsoft is MSFT, and FTS recognizes the full name Microsoft, and now it's loading that. So if you look at where my cursor is on the right, the immediate competitors, Microsoft, Apple, Google, and Oracle, the risk-free rate is all the same because that's a macroeconomic parameter. So there's no information there. Now follow my cursor to this place where it's blue background and gold lettering. The closing price, I'm doing this on a Saturday, the closing price Friday on Microsoft was 29.85. The latest SEC data or filing was June 30th. Was for the period ending June 30th. It was filed on July 26th. The risk-free rate is, as we saw on the chart just to the right, 2.78%. The beta is 1.13. I know some of you have seen betas for Microsoft that are around 1. You've seen 1.01, I think, in MSN Money lately, and you've seen 1 coming out of FTS. It has to do, the difference here has to do with the number of periods of trailing data used to create the beta. It's a regression analysis, so we don't need to figure out all the different time periods. We'll just work with this one. The equity risk premium, 5.1%, and that leads to a CAPM discount rate of 8.543%. Now, let's widen that window a little bit. Let's go to the top of it. Follow my cursor. See where it says click to edit data? I'm going to edit the data. Now, I don't have too many choices here, but I want to demonstrate what happens if we play around with the equity risk premium. It says it's 5.1. I'm going to change it to 6.1. So I'm changing the 5 to a 6. And I click on stock information and accept changes. Oh, close window. And we are not seeing the value because we forgot to specify a model. So I'm pulling down some models here. I'm showing you some models by pulling down. What I want to work with is the dividend model, which is the Gordon dividend discount model. In that, let's choose the simple models. If you're in Finance 780, you can play around on your own with the one where my cursor now sits, the free cash flow model, but that's not necessary for either Finance 640, Finance 504, or Finance 715. So in the simple model, let's first look at the one-stage model. New information pops up. You see that the intrinsic value of the stock is only $21.91. And that's pretty darn low compared to, follow my cursor, the actual market close of 29.85. But that's because I changed one of the input parameters. I changed, now I forget which one I changed. I changed the equity risk premium where my cursor now is. Let's change it back to where it defaulted, back to where FTS says it should be. Oh, I have to go up to edit data again, and I'll go back into values, and here is where I changed it from 5.1 to 6.1. Let's change it back to 5.1. I can close the window. And now let's look again at the intrinsic value. Follow the cursor. It's the gray box called Valuation Models. $30.97. So that's up from 21 bucks or so. And the only thing I changed was the equity risk premium. So you can see now how you get the value of a stock using the immense stored data set in FTS's server. Let's do one more change. Let's change, I'll click on Edit Data, and I'm going to change the growth rate from 5.8%. Let's make it 8.8%. This would be the old Microsoft before it had all these competitors. Now you see, well, let's see, something that I don't like that result. Now Microsoft is worth minus $326. So let's go back to Edit Data to see what I did that was weird. I made the following error. If you remember from your studies of the dividend discount model, which is the dividend one period out divided by by K minus G, G has to be less than K. In other words, if you take the sum of the risk-free rate, 2.78, and the equity risk premium, 5.1, they're bigger than the growth rate I put in. So let's use a lower growth rate, and this should work better. If it doesn't, I'll be embarrassed. Let's make it 6.9. Now I'll close the window and it'll reprocess. Now you see the intrinsic value, where my cursor is $52. So using the actually observed data from FTS, which is a very high-powered and sophisticated group of mathematicians running it, the intrinsic value was around 30 bucks and the close was around 29.85, which is essentially around 30 bucks. Just changing that growth rate up to 6.9 made Microsoft worth 52 bucks. And so if you could buy it at 30, you'd sell your house. You'd sell your children. Excuse that. That's probably in bad taste. You know what I'm saying is you'd go crazy buying the stock because it's drastically undervalued. I have children too, so I'm not showing any disrespect for parenting. But Microsoft simply isn't growing at that rate, and it's not going to with the competitors, Apple, Google, and Oracle getting in the way. So let's do one more change. We've changed growth rate a couple of times. I've changed the equity risk premium. If you want to know what that is, you can look it up because I don't want to make this demonstration endless. Why don't we change the dividend rate? It's 80 cents per year, which is 20 cents per quarter per share. So we'll go to Edit Data, and the dividend is 80 cents. I'm going to make it $1. If I can get to that. I've made it $1, giving shareholders a raise. Now, before I close the window, let me remind you what we saw last for the intrinsic value was $52. Let's see what it is now. It's gone up from $52 to $65. So that shows the power using the one-stage dividend model of changing the dividend significantly upward. Now, I'll leave it to you to play with other models. Follow my cursor over to the left. We have a two-stage simple model, and we could do the free cash flow model, and there's variations in that, where Finance 780 students should be after a few weeks into the semester is stage 2 free cash flow model. I'm not going to worry about, for the moment, these more esoteric models because they have a lot to do with the way certain professors at Carnegie Mellon teach valuation. They're not necessarily the way we do it here or the way they do it at NYU, which is one of my target sites for you. The Aswat Damodaran website is extremely informative for valuation. So I'm going to wind this up now because it's gotten a little bit too long, and I hope you enjoy this.